Everybody, this is Bill Black with Northwest Funding Group. Just want to go over a couple tools that we have on our website for the financing, and then Keelan has over on the real estate side of things. We've been working really hard to try to make it a one-stop shop between the two of us. So the mortgage side of things, you go to billcblack.com. You're either going to click on purchase or refinance. There's some information down here, a little bit more about what we do. But the calculators is the tool that I use. This is where you would do the applying. Also have some really great blogs are talking. Most recent blog was about the difference between conventional and non-conforming. Should you buy or wait in Clark County? So try to keep that up to date every 2 or 3 days. But what I wanted to point out was over on the calculator here. So under the advanced side of things, right now I'm looking at a $500,000 home with 20% down and sitting at a rate of 7%. So here's where you get the payment, 2661. And on this specific house that we're going to do a scenario today for a Kelso, taxes are $618. It's pretty a house on 10 acres, pretty cool little project I'd like to share with you guys today. Homeowners insurance about $100. And so over on her site, if you go to sellingkeys.com, under just if you go to sellingkeys.com, what it'll do, let me get to the right one here. So when you go to Selling Keys, let me just take and show you. Communities will pop up here. I went to Cowlitz County, and Cowlitz County came down. I said, okay, give me the houses in Kelso. And then it'll, once you register, we'll be able to help you identify. And this is kind of what our buyers are doing. Very, very robust, up to date, up to the minute data for those homes. So when I was looking at Kelso, what I try to share with people is we're coming off of the bottom right now in the market index. We're improving. It's up to a 48. It looks like we're all the way down to a 43. And then the total active listings is down. That means values are going up. Median price is going up. A lot of this is because of the Lennar and D.R. Horton is building some 600,000, 700,000 houses up there, a couple of 900,000 on the river. So the median list price is continuously to increase. But one of the houses that came up that I really like is this one here that just popped up, I believe today. $500,000 listing, only 141 a square foot, huge house, 3,500 square feet on 9.88 acres, 4 bedroom, 2 bath. It's kind of a fixer, but it's out there. It's really cool, I think. So taking a look at this, what we're looking at is putting this house into the mortgage calculator with a $500,000 purchase, 20% down. You're going to get 3379. So that would be how you would come up with a payment. Now, what I'm showing people that is working really well is the 2-1 buy down or the 1.0 buy down. So if rates today were at 7% in this scenario where you're putting 20% down, $400,000 loan amount, your total payment would be 2661 without taxes and insurance. So if you did a 1.0 buy down, that's 3156 for that buy down would be the cost that you would ask the seller to pay. That would save you $263 a month for the first 12 months. The other option would be to get $6,300 from the seller, and you just have the 1.0 buy down for 2 years in a row. You're saving 263 year 1 and 2. The 2-1 buy down, you're saving $513 the first year, every single month. That payment is down to 2147 from 2661. And then if you don't refinance, if rates are not fall, down under about 6%, then you're going to be able to go into year 2, and you would have a 6% rate during that time. And again, this is all about waiting on rates to drop before we refinance and keep the payment lower. Let's say you get 12 months into this with this 5% rate right here, and you use up to 6167. The 3156 gets refunded back to you, and it goes right back to your principal. So this is not like the old buy downs where you pay 15 grand to save $150, and if you're not in there 100 months, you're going to lose the money. So this is the ideal way of being able to utilize selling contributions without lowering the closing cost or without lowering the price, by utilizing those funds to be able to set your payment off. What I really like, depending on, in this situation, if they did an $18,000 price drop, so instead of taking, they wanted 500, instead of taking $478,000 on this house, you asked for 18,000 seller contributions. What that's doing is that's saving you $750 a month. So that home that we were talking about that needed a little bit of work and under the construction side of things, we would be able to keep that payment down to 1909 plus taxes and insurance. Give that first year to keep payments low while you're coming in, getting it all fixed, getting it all nice, then you would be looking at remodeling. That value is probably going to be more in the 700 range. So that would take $9,000, 6,000 year two, 3,000 year three, and 18,341 would go into an escrow account to offset these payments right here. If you refinance after year one, you're going to get back the 6167 and the 3156. So really cool deal. I have found out that some credit unions and some of the other lenders in town are not doing these buy downs. So just make sure that you ask about the temporary buy down. But it's time to get creative with this high interest rate market. We might even see. I mean, I think rates might even be as close to 7.5. And in that situation, you're looking at saving. Down here, you're looking at saving about $770 a month on something like this. So, have any questions? Here is my information: 360-910-3290. Thank you, and make it a great day.